It's great to be here with all of you at the 11th annual Engage event. I'm Tony Garitano, founder of Progress in Lending Association. Engage is a great event because every year it really allows Progress to display and put out there for all of you our mission and expand industry awareness and thought leadership the way we had always intended when we started the company. Before we get started officially with the program, I want to thank our sponsors. First, I'd like to thank Loretta. Since 1986, Loretta has provided the mortgage and insurance industries the fastest, most accurate and complete access to property tax data and flood hazard status information across the U.S. Loretta is committed to giving customers extraordinary service and cost-effective property tax and flood solutions. Loretta's services are designed to increase efficiency, reduce penalties and liabilities, and improve processes for mortgage originators and servicers. Loretta's dedicated team of real estate, tax, and flood professionals, along with Loretta's experienced management team, allow the company to lead the industry in service and technology. I would also like to thank Questsoft Corporation, an end contracts company. Questsoft is the leading provider of comprehensive compliance software and services for the mortgage, bank, and credit unions. Questsoft offers solutions for HMDA processing and reporting, CRA and fair lending compliance analytics, automated compliance reviews, and software design expertise, which enables more than 2,700 customers to simplify and speed the collection, analysis, and reporting of key lending data. Now, I want to tell you a little bit about the exciting agenda that we have planned for you today. We have 4 great panels with a lot of industry insiders sharing their knowledge for everyone here. That knowledge is going to get you ahead of the market and prepared for what is to come in 2022. And stay tuned to the end of the program as we announce our 2021 Lending Luminary Award winners. Now, to get us started with our first panel, I'd like to welcome our moderator, Michael Hammond, president of Next Level Advisors and a member of the Progress in Lending executive team. Start us off, Michael.
Thank you for that wonderful introduction, Tony. I couldn't be more excited about our first panel. Today, more than ever, data and analytics is playing a critical role in mortgage lending. We've assembled an amazing panel of experts to discuss that very topic. Our first guest is an industry insider. He has a wealth of expertise and experience. Please help me welcome Eric Coelia, Vice President, Product Marketing, ICE Mortgage Technology. Eric?
Hello, everyone. Eric Coelia here with ICE Mortgage Technology on behalf of Progress in Lending. So, asked to do kind of a data and analytics discussion today. So, as you can see, I'm in my basement, as I'm sure many of you are, and hopefully we'll get back to the office here soon. It's exciting to see some conferences kick back up. But data analytics, that's a very kind of big topic. I'm actually probably going to focus on the data side of that conversation, mainly because it's something that I'm involved with on a regular basis and have some opinions about it. It's probably a good way to put it. But data is a very big term, right? And everyone wants access to it, right? The industry is kind of migrating that way and has been for many years. I mean, as long as I've been doing this, clearly, and probably even before that. To the point where I was on a call a few weeks ago where someone said, "Hey, look, we want to get to the point where we can actually, trade mortgages kind of like stocks, right? And in order to do that, we need to get away from the quote-unquote paper, whether they be in digital format or in actual physical format. And in order to do that, we need to get to the data kind of behind it. Right now, I keep saying the word data, but it's interesting because as we kind of talk to customers about it, we want to ask ourselves several questions. Number one is, Look at the ways you're getting data today, whether it be in the format of a digital piece of paper, verbally over the phone, transcribed into the LOS, and so on. Getting to the data is one thing. Being able to use it and drive analytics is something completely different. So let me focus a little bit on the data portion of it. Understand the different formats that are coming. I don't mean just like XML versus JSON. I mean the physical usage of that data, the format in which it comes in, so that it's standardized and normalized. Once that's done, that can then feed your analytics. The analytics side, probably going to get shot here, but is arguably the easier thing if you can get the data correct and normalized. So think of the ways of all the stuff that you guys get stuff, and I say that somewhat broadly, whether it comes off an image, the aggregators, your LOS, another system, and so on. That data can come in all different shapes and sizes, and in duplicates or arguably duplicates or similar type documents where you'll need to distinguish between document A versus document B. They appear to be similar. They might be duplicates, but the question is, on that information, which data set actually wins, right? And then that data set then gets pumped into your analytics tool. So there's a lot of questions around that. I know this is probably a fairly big topic. I've only got a couple minutes here, but you definitely want to dive into the different data entry points within your process, understand where they come in, and then understand how that data is going to be normalized and rationalized, which is then fed into your analytics tools, whether they be a business intelligence tool or something like the analyzer solutions that ICE Mortgage Technology offers, or anything else that's out there as well. If the data is not good, your analytics tool is not going to work. So with that, I'll kind of leave it there. Just got a few minutes, probably tons of different questions around that, but appreciate the time. Everyone be safe, healthy, and on behalf of Progress in Lending, thank you. On behalf of ICE Mortgage Technology, thank you.
Excellent insights, Eric. Thank you for sharing. Our next panel member is the amazing Suha Zeel. She's the Chief Innovation Officer with the Blackfin Group. Suha, share with us your views on data and analytics in mortgage lending.
Thanks, Michael, for inviting me to be on this panel to talk about data and analytics in the mortgage industry. First of all, I think you will agree that we in this industry collect the most accurate and complete data on our customers. For us, it's not a choice, it's actually a regulatory requirement so we can render the right decisions for our customers. But I also think that you will agree that the flood of data that we collect and consume every single day has really transformed data into probably one of the most valuable assets in each of our companies. I've actually heard the phrase several times recently, how can we weaponize our data so that we can use it to our advantage? So the big question is this then. What are we doing with all the data that we're collecting? And how are we using it to our advantage? Obviously, the volume of data that we're collecting gives us the opportunity to better understand our customers and in turn allow us to provide them the right products and services at the right time. Having this volume of data allows us to craft insights, but that becomes more challenging as the data volume, velocity, and variance grows. A recent Harvard Business Review article states that 32% of companies don't have a central approach to collecting and analyzing data. And 68% have indicated that they do not share insights across departments. So everything is staying siloed, even to this day in 2021. The article goes on to say that 4% actually believe they are good at analytics. So I think what this article is alluding to is that companies are still struggling. They're still challenged with the required scale and agility needed to analyze all the data that they have collected, let alone be able to capitalize from the opportunities these insights have provided to help them drive innovation, increase effectiveness, and improve their bottom line. To be a data-driven organization is more than creating a collection of reports. Actually, creating a lot of reports and sending them all over the organization leads to almost analysis paralysis. What I mean is this: creating a lot of reports can actually be overwhelming and delay and sometimes even stop you from being able to take action. This leads me to believe that it is really critical for a mortgage company, any company for that matter, to have a strategy that allows them to harness their data so they can turn it into actionable insights. By reflecting on your company's strategy and goals, you begin to understand the why, the how, the what, and the who necessary for a successful BI initiative. Here are some things for you to consider as you're developing your BI strategy. Has your BI strategy identified the reports that align with your company goals? Whether these are general health reports that give you the bird's eye view of how the company is performing, or ones that highlight any blind spots that you may not be aware of. What about trend reports that help you better understand your customers and how well you are serving them? Or the most critical, actionable reports that help you create real change in the organization? Another thing you may want to ask yourself is this: is your company leveraging technological advances like artificial intelligence, machine learning, and RPA to help drive the business intelligence strategy and initiative? Have you identified the key stakeholders that will make the biggest impact on the success of your BI initiative? Do you know all the different data sources? And have you broken down all the silos from all these data sources so you can curate the right story and recognize the trends distilled from these analyses? Another thing to consider is this: are you continuously evaluating and fine-tuning your BI strategy to make sure you can pivot and respond to the changing dynamic housing industry? I leave you with this final thought. As I've said before, data is a differentiator, and analytics must be woven into the fabric of the entire organization. In a changing competitive landscape, companies need more than a handful of reports. They need business intelligence that facilitates powerful data-driven decisions and actions. Thanks again, Michael. And I hope that this gives a solid framework and foundation for the need of a business intelligence initiative and how it plays into the data and analytics in the mortgage industry.
Great insight, Suha. Thank you so much. Here comes another industry heavy hitter with a wealth of knowledge. Please help me welcome Corey Smith, Chief Product Officer at First Close.
Hey everybody, my name is Corey Smith. I'm the Chief Product Officer at First Close. I first want to thank Progress in Lending for inviting me to participate in this roundtable discussion on data and analytics in the mortgage industry. I've been in this industry for 30 years now, and historically speaking, the mortgage industry has not been the technology trendsetters. That might be an understatement, but still true nonetheless. Honestly, the industry has just notoriously been behind the technology curve. But since the pandemic hit us, lenders have been encouraged, in air quotes, to find new ways to enhance their digital lending experience. But let's face it, the consumer is in the driver's seat here. The demand for a better experience is here. They want their mortgage loan experience to be just as easy as their recent online retail experience. Well, you call it the Amazon effect. After the past 18 months, and it's obviously been a pretty crazy 18 months, lenders have more data at their fingertips than they've ever had before. And, do they know what to do with it? So what should lenders be analyzing in their data? What should their business analyst be focused on? Well, the short answer to me is the customer experience. But how do we measure customer experience? It's not as easy to see the value of customer experience as it is to see the ROI of your other investments. But customer experience is incredibly valuable. There's a research by Deloitte and Touche that found that customer-centric companies were 60% more profitable compared to companies that were not focused on the customer. So without a customer focus, mortgage lenders just, they're not going to be able to compete. I think we know that. I'm not telling you anything you don't know. Many lenders have answered the digital call, with a similar front-end experience. Some have even revamped their back-end processing experience. But how does a business analyst show the executive team the value of their customer experience? Well, the short answer is they're going to have to map out that entire digital lending journey. At First Close, we call that from hello to here's your money. One of those key areas to analyze is that lead funnel, or what's known as the point of sale. What is the lead capture rate? Lead to application pull-through rate? What's the bounce rate in your digital lending experience? What page has the highest bounce rate and why? That's the important piece right there. What's the average time to complete the application? Once the application is submitted, what's the average time it takes the LOs to engage with the borrower? Again, those are important KPIs that can guide an institution into, making decisions on how to improve their digital lending experience. And continuing along that loan journey, we can apply the same type of data analysis to the back-end underwriting and processing to find potential bottlenecks in the loan fulfillment process. Like analyzing your appraisal and title processes is probably where most of the time is being wasted right now. You can really uncover where the bottlenecks exist. So measuring appraisal acceptance to appraisal scheduling to appraisal review, where's the time suck? Same thing in title. Measuring the time it takes to get a title commitment. Closing disclosures, closing scheduled to document signed, from signed to ready to close, ready to fund. We're able to find our customers huge time savings just by analyzing an appraisal or title vendor's workflow. That's the key to having a superior experience. Using data analytics to identify and remove the friction and pain points for everyone involved in that mortgage process. And I'm not just referring to the consumer experience, right? What's the experience for all other users in the mortgage chain? What's that LO's experience, the underwriter's experience, the processor, closing agent? That's the key today. Focus in on the customer experience and measure it in a monthly or quarterly basis using data and analytics. From there, executives can make informed, data-driven decisions to help meet their goals. Thank you, everyone, for the time today. I'm very interested to hear your thoughts. Take care.
Thank you for sharing your thoughts and expertise, Corey. Our final guest on this incredible panel is Noor Penjwani. He is the president and CEO of Awesome Technologies. Noor, take it away.
Thank you, Progress in Lending, for this opportunity to be on this data and analytics panel. As I talk to lenders throughout the country, they continue to tell me that they are looking for ways to automate the manufacturing of loans further to reduce bottleneck and cost, lower customer acquisition cost, improve turn times, and while increasing capacity. It starts with being able to easily access data to provide forecast, track, and analyze information for actionable insight in real time. In this rapidly changing and in many ways unpredictable lending environment of 2021, being able to make better and faster business decisions is critical for lending sustainability. As we progress, it is clear lender will be only able to thrive if they integrate data-driven technologies into their company's vision. Analytics can only work when combined with lending process itself. The result will only be useful if the data collection is done with the purpose. In today's environment, you must have everyone from the top down engaged in data initiatives to get value and a competitive advantage. The culture of an organization depends on how the top leaders behave. If the leaders emphasize a data-driven culture, the company's goal will be achieved better. Data analytics initiatives often fail due to lack of data integration. The tools you select for your data collections can determine whether this happens. One important factor for achieving success for lenders is choosing a tool that will accurately analyze numbers into actionable information so meaningful conclusions can be drawn. Thank you.
Thank you, Michael. Thank you, panelists. That was a great talk. I think there were a lot of great insights there. Now, I want to introduce or get us started with the second panel. The topic of diversity, equity, and inclusion is something that we can't ignore. We as an industry have to be more diverse, more equitable, and more inclusive. So how do we do that? Well, we've assembled a panel of industry experts to give you some insights on how to get there. I would first like to introduce Paul Gigliotti. He's the CEO of Axis Lending Academy. Start us off, Paul.
How interesting is it that we're the industry that provides that, but still to this day, 77% of the employees in the mortgage lending industry are middle-aged white men. So if we're supposed to be out there as a proponent to provide the American dream, the American nation is a melting pot. Wouldn't you think that we would be one of the industries that was on the forefront of providing the American dream for everyone in an industry that gives the ability to provide the American dream by working in our industry, right? Because we all know that 30% of the goods or service that are provided by the company are provided to the employee, right? So if you sit back and think of a retail store or a CPA firm or a law firm, whatever the service, whatever the good is, food products, cars, 30% of the sales come from employees, friends, and family. So if we're providing that American dream, you would automatically think that we have an open door to providing the workplace to understand how to get the American dream, to be able to have the funds or ability to buy that American dream. Our industry has done an amazing job the past 2 years educating about diversity, equity, and inclusion in the workplace and bringing this awareness. I mean, if we sit back and think of these, flag stars initiatives with diversity, equity, and inclusion is mind-blowing. Mary has done an amazing job. What the National MBA is doing with diversity, equity, and inclusion, their council is huge. They have an entire department dedicated to educating and speaking about and bringing to the table that we've got this issue. So all Access Lending Academy has done, and I say all with a kind of like an undertone of, wow, it's a lot, but all Access Lending Academy has done is taken the education that we've heard about and taken the conversations that we've heard about and speaking about diversity, equity, and inclusion. We've taken all of that and we've moved it to an action. So we've been the first in our industry to provide a solve. We've been the first in our industry to take all this awareness and all this speaking around diversity, equity, and inclusion and provide a solve that not only fulfills the needs of our industry, everybody involved in our company, but also those diverse individuals.
That was some great insight, Paul. Now I'd like to introduce the lending perspective to the panel. So join me in welcoming Fabi Nagmi. He's the Executive Vice President and Sales Manager at First Option Mortgage. What do you think about this topic, Fabi?
Hi, I'm Fabi Nagmi. I'm the National Sales Manager for First Option Mortgage. And I want to thank Progress in Lending for allowing this space for us to come and share our thoughts and our opinions on the topic of diversity and inclusion. It's such an important topic that we need to discuss openly. And quite honestly, when we start talking about inclusion and diversity, that really is the first thought that comes to my mind, is that space, that openness where we have that ability to come and share our thoughts. That's what really allows this. So I want to thank Progress in Lending for creating that space for me. When I got in the business in 1994, I mean, the word inclusion and diversity weren't even mentioned. I mean, it was not heard of. There was no forum for those kind of topics or conversations. So yeah, there were many times that I would walk into a seminar or some kind of industry event, and I definitely did not feel part of. I would look around, and I did not see a lot of guys that looked like me. And so, yeah, it was uncomfortable. I was really moved by associations within our industry that were raising the voices of minorities, that were including them in their decision-making process of how the association should be formulated, the agenda, and to raise awareness of those certain minority groups. then the minority groups were able to go back to their communities and educate a better homeowner. And that is how engagement and inclusion of a certain minority makes a better consumer for all of us. To be perfectly honest, I didn't even know the difference between diversity and inclusion until just a few years ago. A good friend of mine, Tony Thompson, who a lot of you guys might know already, who was on my podcast, and we were talking obviously about NAMBA and so on. And one of the things that he said to me was, diversity is good, inclusion is better. And what I realized was, you could have a company that was diverse, that had minorities, that had women, that had all these different types of combination of people working for the company. But unless their voices were heard and they were made to feel part of, there was no inclusion. So the companies that create that space, that create programs for those certain segments of our sales force or our company to have their voices heard and to be listened and then to be executed, that begins the part of inclusion within our mortgage industry. The word culture is thrown around a lot. I throw it around a lot. I mean, everyone does, right? But what is culture, right? And where does it come from? Well, for me, culture comes from the top of the company all the way down. So it's really the leadership that's creating the culture. And when the leadership allows all the voices to be heard, the entire diverse group, and now there's inclusion in that culture, what you really begin to build is a very strong company culture with that. At First Option Mortgage, we've actually created a program called the Insiders. And the objective of the Insiders is to be able to influence our other company employees to be engaged and to feel free and comfortable with their voices and their opinions. It creates that culture where there's of safety, where they are not going to feel uncomfortable, where they feel like they're a part of something that's growing. And that's what companies really need to start looking at. How do I let people express themselves in a safe environment? So how do we create that space? And that's what we really need to start working on, is creating programs within our companies that really expound those ideas. Once again, thank you so much to Progress in Lending. I hope I didn't bore anybody with my thoughts and my opinions. And thank you so much for letting me speak.
Very well said, Fabi. I want to stick with the lender perspective as I introduce our next speaker. Her name is Lola Oyewole. She is Vice President, Human Resources and Chief Diversity Officer and Inclusion Officer at Ocwen Financial Corp and PHH Mortgage. Lola, what insights can you share with us about this topic?
So it's a great question, Tony. You know, the way that companies can promote DNI in mortgage lending is to first start from within. You know, ensuring that we have strong policies and practices that support DNI strategies is absolutely important. So I think there are 4 ways that companies can do this. One is to educate. It's important that employees understand not only what diversity, equity, and inclusion is, but why it's important and why it's important particularly now. And not only that, but the benefits and the value that DNI brings to an organization. You know, the second thing that companies can do is to look at who's coming in the door. It's all about building a workforce that represents the customers that you serve. The third thing that companies can do is look internally at the policies and the practices and ensure that they're inclusive for all employees. You know, when you have an environment that that employees want to work in, where they can be their full selves, not only do you get higher productivity, you get stronger engagement, you get retention of talent, and overall, it just really drives success for your organization. And then the fourth thing, which I think is one of the most important things, is to measure and report and tie DNI goals to individual performance. You know, at PHH, all employees are annually evaluated on sustaining an inclusive workplace. It's embedded in our values. It's something that we measure with our senior leaders. D&I goals are measured in their performance evaluation. It's also tied to their compensation. And we're seeing results from doing that. So let me share some numbers with you. You know, roughly 75% of our US employees are diverse. Also, about 45% of our employees are minorities. You know, 57% of the hires we've made this year are women. And, you know, we formed a partnership with Home Free USA to recruit students from historically Black colleges and universities. And, you know, we launched 2 affinity groups that promote belonging for our African American and LGBT employees across the organization. You know, as chair of the American Mortgage Diversity Council, I'm really proud to be working with companies to promote D&I in the industry. It's really an exciting time.
That's a lot of great information. Thank you for sharing. Now, I'd like to introduce the last speaker on this panel, Brad Sivert. He's head of marketing and PropTech at Tavant. Brad, what do you think about this issue?
All right, hi everyone. My name is Brad from Sivert. I'm very excited to be here to speak with you all at Engage. So one of the topics we're talking about today is DEI. That's diversity, equality, and inclusion. It's a topic we in the industry have been talking about for a while, and it's one that some of us take more seriously than others. But it's a holistic concept of when you get the best people together and let them feel as comfortable as they can, then they can perform at their best. And when people perform at their best, that's when people and companies succeed. So by making everyone feel as an equal team player, regardless of any aspect of their personal life, that's what diversity, equality, and inclusion is all about. In the mortgage industry holistically, we have come a long way. Nearly 40% of mortgage executives are female leaders now. That is an amazing statistic. Here at Tavant, 1/3 of our 3,000 employees are female, and that's something we strive for more and more to increase upon every day. So diversity, as you talk about it, it's not one or two things. It's the concept of making people feel as comfortable as you can in their work environment. When people feel comfortable and motivated, they deliver the best results possible, which is what takes us to the next level. So for those of you who are a little nervous about, maybe getting your feet wet here, I'm coming to you right now from beautiful San Diego, where it's okay to get your feet wet. It's okay to talk about diversity. It's something we all need to talk about. Once again, my name is Brad from Tavant. Thank you all very much.
An amazing panel and such an important topic: diversity, equity, and inclusion in the mortgage industry. Tony, thank you for sharing that with us. As the mortgage industry has shifted to a predominantly purchase market, lenders are forced to enhance their purchase strategy. Let's hear from this incredible panel on the future of the purchase market. Our first guest impacts the mortgage industry at large has been unmistakable. He has personally trained thousands of loan officers that have directly impacted hundreds of thousands of borrowers over his 22-year career. He now dedicates himself solely to helping other lenders be more successful through his technology platform, Incelerate. Please help me welcome CEO and founder of Incelerate, Josh Friend.
Hello, everyone. This is Josh Friend, CEO and founder of Accelerate. Just was asked to record a few minutes and thoughts of the purchase market and what I think the market's going to look like in the years to come. I think the headline is the volume's going to grow. Right? Purchase transactions are going to increase. There's pent-up demand as housing starts to pick up even faster. There'll be even more sales. So the shift from all these refinance, all this money made, infrastructure built, if you do it correctly, will get picked up right inside of purchase. So we really see that purchase is going, what we know it's going to grow. Now, I think the trends and things that are going to be different and maybe somewhat surprising are what areas it grows in, right? There's always been this consumer direct, distributed retail. That's the two parts of, origination, if you will. And that's kind of morphing, and there's been this hybrid going on for a while. I've seen more distributed retail lenders take on consumer direct technology because they're starting to buy leads from local, people who are in their local area shopping online. COVID sped up this whole online shopping, right? So now you have these customers who are online even more, and they're looking to buy homes, and they're actually asking for people to buy homes. I've been in the mortgage industry for a long time, 22 years now. And what I can tell you is in the industry, I've always been on kind of the consumer direct side mostly. And what the industry always was is purchase leads didn't perform as well because there was more work to them. So internet leads didn't really do what they should with them. Now I can tell you lenders who work those leads were very successful. What I think is going to be the big pickup is going to be even more demand online, right? Coming into the next several years. So that's how consumers are, how they want to transact. Millennials, that's how they want to transact. They're becoming a bigger and bigger part of home buying right now. So those lenders who are able to engage and work with the customers appropriately are going to really thrive. And what I can tell you is there's going to be a lot of consolidation because we just did a MBA contact study, which you guys should take a look at. We went out to 490 lenders. We applied online and see what their follow-up process was. I can tell you 40% of those lenders never even responded. So lenders, I mean, just think about that. Not even, 40% never responded. I think maybe 20% ever got a phone call. The response times took about, a day to call someone or interact with someone. So lenders aren't doing a great job of this. So those lenders who adapt now and use technology to do a great job of this and then go into the purchase market are going to absolutely take market share. Right? They're going to take these leads that have been in the industry for a long time because people have been wanting to chase refinances, and they're going to go into purchases. And I can tell you right now, there's lenders out there building. We have lenders on our platform that have this hybrid model. We have lenders who are consumer direct lenders who have been doing purchase this entire time, and they're doing an amazing job of it. So I think that's what I see as the future is understanding how a consumer is a consumer, distributed retail, consumer direct. It's the same thing. I'm buying a house. If I'm out looking at homes, believe me, I'm looking online, seeing offers for mortgages. I'm probably even put my name in somewhere just getting a quote. So your buyers are online, right? So having those tools and the technology to take advantage of that, it's going to really, really greatly improve your business. And then having platforms that can manage that appropriately, those people are going to win. So that's just kind of my prediction. Obviously, we know the mortgage industry, the purchase volume is going to grow. And those lenders who embrace the technology of engaging with customers and follow the consumer direct tools, if you will, are going to really gain market share over the years. Have a great day.
Fantastic insights, Josh. Thank you. Well, our next guest is a former lending badass. She is a ceiling breaker, a social media rock star, and now coach to thousands in the mortgage industry. Please help me welcome the one and only Christine Beckwith, founder of 2020 Vision for Success Coaching.
How are you today? I'm here to talk to you about the purchase market in 2021 and what remains for the rest of this year. And so, of course, our entire troops nationwide are heads down, helping homeowners understand today the high equity point that they find themselves at. Over the last 33 years that I've been in the mortgage industry, we've seen ebbing and flowing markets, right? Complete devastation markets. And then the market that we're in, which of course is very volatile and unexpected and somewhat unpredictable. I, like so many of you, tune into all of the networks and all the media channels and all of the great giants in our field that provide economic news. And where we are right now, from the assemblance of all this information, is in a place of high demand and low inventory, as you know. So if we were selling stocks on Wall Street, I would obviously be a person that would be telling someone to sell when it was at a historical high. Well, that is where we are with real estate. Now, obviously, there's a lot of factors to consider. So people have been living in their homes as shelters this past year and still are. And as a result, there has been a resistance and a slowdown in listing homes. However, it is our job as financial representatives of the market to explain to all the people in our networks, our CRMs, our databases, and within our reach, from a social media standpoint to let them know that now is the time to sell, that there is a great opportunity to cash in on a high equity point. It is also a time to leverage that equity. If you're not in the mindset of selling, then of course, what could you be doing with this equity that would help you? Not just obviously savings in a rate and term situation. I think that market has all but dried up. And going into an economy that probably will have rising rates in the future to some degree, the conversation has to move to what could you do with the equity that you have? Where are the investment vehicles that you could put that into, or debt consolidation and so on and so forth. Now is also a time that is so important to be bringing value to your realtor partners. What education are you helping them with the markets? How are you helping them plan for a great 2022? Are you bringing them educational content? For instance, this month was Realtor Safety Month, and so we conducted a realtor safety education for our real estate partners. And so I ask you, what value are you bringing to your real estate partners that can help them in the market ahead? Are you tuning into the right channels like this one right here with Michael Hammond? You know, are you listening to where the news is? And are you able to connect the dots in this market and help create positive, forward, fundamentally great advice for mortgage holders using what we know right now and where we're going so that you can better their situation financially? Good luck and stay tuned with 2020 Vision for Success, and check us out on social media. Thank you so much.
Thank you, Christine. You always provide valuable information and insights. Well, our next guest pours her heart out to help others in the industry. She is a social media influencer, host of Taco Tuesday podcast. She's a property investor and VP of Diversity and Growth at EPM. Please help me welcome the absolutely amazing Delilah Ramos.
I am here to talk to you about the purchase market. I recently purchased 2 properties within the last 9 months, so I'd like to share my experiences along with some tips and tricks that'll help you ultimately win that offer and get you into your home. So here we go. Cash is king, folks. So if you have the ability to purchase your home in cash, do it. Chances are that will help you immensely win the offer and seal that deal and get you into that property. Cash is still king. If you have the ability to put a little bit more money down, do it and go the conventional route. Right now, the conventional approval offer letter is getting looked at and accepted more. So if you can, put a little bit more down, go the conventional route, and that should help you with winning that offer. If you have an FHA or government approval, make sure that your team, so your real estate agent and your lender, is familiar with the FHA policy, the product, the guidelines, so that will help them and you negotiate that home and offer and ultimately get you into your home. Also, I currently live in the beautiful state of Florida, and a lot of folks have moved down here during this current environment. So one of the things, if you're looking to move to another state, is carve out some time and plan a trip to that state and city that you're interested in moving. Please do not rely on a virtual walkthrough or FaceTime to make your final decision. Take the trip, make the time, and go down to that city or state that you're interested in moving to. Also, if you're moving to a different state, again, your real estate agent and your lender should be local, and they should be doing it on a full-time basis. These professionals will know the cities, the communities, and will help you navigate through that process, especially if you don't live there. So make sure your team is local. Also, a good tip is, if you're planning to move to a different city or a different state and you're interested in a certain community, join that community's Facebook group page. All the neighborhoods, all the communities have it. Join it and they always like to share and give you the 411 on what's happening in their neck of the woods. So that's a really good tip. And then lastly, the school district. Don't forget to research the school district and see how well it's doing. Even if you don't have children, when you go to resell that home, chances are the next buyer will be interested in the school district and how well it performs. And that'll help you with selling that home. So those are my experiences and some tips and tricks that'll hopefully get you to win that offer and into your home. Best of luck during this crazy purchase market time. Be patient and good luck. Thanks. Bye.
Awesome job, Delilah. Thank you so much. Our next guest has a wealth of knowledge and expertise in mortgage lending, and more importantly, the technology that helps drive production. Please help me welcome Rocky Forentan, CEO at Lender Homepage.
Yeah, I think that with mortgage rates as low as they have been for as long as they have been, I think anyone who has had a need for refinancing has already refinanced their homes and have gotten into better rates. And the phones for mortgage professionals is going to ring a little bit less than it has in the past. And the market as a whole, we will be shifting into a purchase market for mortgage professionals. And I think that loan officers have to get back into engaging with their partners, who would be the realtor partners, the CPAs, the tax accountants, the divorce attorneys, anybody who can generate leads for them. And they need to get back into the hard work of engaging with those partners and creating value for them as a mortgage professional, as well as getting those referrals coming from them to their neck of the woods. And I think that there are many tools that are available to mortgage professionals to engage their partners. We actually offer a few ourselves at Lender Homepage. We are an all-in-one mortgage platform. So one of the things that we do that has been very well accepted by our loan officers is a co-branded mobile app, which is a mobile app designed for consumers to run mortgage scenarios and payment scenarios. And this is a branded app that they can actually co-brand either for themselves or co-brand it with their realtors, and the realtor partner can actually share this app with prospective buyers. Tools like that, in general, so some co-branded marketing and or generating some brochures and flyers that again are co-branded and really gets the realtor engaged. I've seen some nice tools on home valuations and appraisals and home prices and the fluctuation of prices. Those tools are pretty useful. I think something like a pre-qualification or pre-approval, which Loanzify, by the way, offers, is another good one, or just application intake in general. So any way that a loan officer can engage a would-be partner that would generate referrals for them would be a great way to move ahead with in the upcoming months. I think in the next 12 to 18 months, we're going to continue to see some great tailwinds in the real estate and home purchase market. And I think that loan officers will definitely benefit from that because we do have the low rates and we do have a housing shortage. So it will be a seller's market and it will be a great time for mortgage professionals to get people into their dream homes, which is the American dream. I hope this is useful to you. And you can always reach me at rocky@lenderhomepage.com and send me an email with any questions you might have.
Thank you for sharing your knowledge and expertise, Rocky. Great job. And last but certainly not least, we have an amazing industry insider. She delivers innovative origination solutions to the marketplace. She's on the board of Progress in Lending. She is just one of the amazing and good people in the industry. Help me welcome the absolutely incredible Kelly Heimbaum, Vice President of Sales at Mortgage Builder Software. Kelly, take us home.
My tech perspective that I want to share today is one of the biggest obstacles that's impacting mortgage lenders as they try to grow their purchase market sector, and that is lack of inventory. We've seen this over the years in pockets around the country from time to time, but in the last year, we're seeing the impact of the lack of new and existing home availability practically everywhere. This isn't just affecting families that make that decision to move across town to land in a better school district. It's affecting bigger decisions about, say, moving across the country for a new job opportunity or to buy a second home. A lender has to take that offensive approach to position their company to be competitive in originating loans for the inventory that comes available sometimes in just a few hours and not days. Technology is the key strategy to find the buyers that can quickly make those offers and close typically within a 30-day period. There is a saying that I've heard a number of times this year when it comes to a buyer making a decision to put in an offer. And that saying goes, if you plan to sleep on making an offer, there's a very good chance you'll never get the chance to sleep in that new home. Buyers want to work with lenders that have strong web-based tools that can give them an instant pre-qualification letter to have in hand when making that offer. A lender's technology suite and website must be mobile enabled and include tools that allow them for instant verifications of employment and assets, an integrated home search engine, home valuation information, and neighborhood reports. These types of tech tools in an arsenal will keep prospective buyers dedicated to a lender site for all of their home search needs, and then ultimately to bring them the big prize, which is capturing that buyer's loan. In addition, combining this experience with a strong CRM that will allow the lender to follow this buyer long after the sale will bring those buyers back for future home loans like home equities, a home improvement loan, a new second home, or that next home sale. This is why I continue to be really excited and energized working in the mortgage tech space. Under Mortgage Builder's 2019 acquisition by Constellation Software, I've been able to see firsthand how an arsenal of real estate tech tools can be incorporated and integrated with both a point of sale and the loan origination system. Using the latest API technology enables a strong web presence, especially for the small to mid-sized lender. This allows these lenders to compete for the constrained home inventories at the same level of the biggest banks and lenders that we are seeing and will continue to see in the near future. So with that, I'm going to turn it back over to you, Tony, and thank you again for the opportunity to participate in this year's Engage event.
Another great panel, Michael. Now, I want to introduce our last panel before we get to the Lending Luminary Award winners. As we end 2021, everybody is looking ahead. Everybody wants to know what's going to happen in 2022. So we asked an esteemed group of industry experts to look into their crystal ball and tell us what would, in your opinion, be the next big thing in 2022 that everybody needs to pay attention to. To get us started, let me welcome Jonathan Willen. He's the Chief Revenue Officer of Loretta. Jonathan, what do you think is going to happen in 2022?
That's a great question, Tony. Thanks for including Loretta in the process. I'm not sure it's the next big thing, but I do believe we're going to see an intensified focus on performance. Customers and regulators expect lenders to do everything flawlessly. Errors have consequences and can damage relationships and reputations. Performance has many facets. How quickly can you originate my loan? How easy can you make it in the process? How well do you treat me during the process? And what are you going to treat me like once I'm a customer? Over the life of a loan, will there be surprises? For example, in tax, will I get hit with unexpected escrow payments? Will I get a notice from the county or the water department about an unpaid tax bill? If that happens, how long will I have to wait to get an answer? And how long will it take to fix the issue? Forward-looking lenders are investing in technology and forming partnerships with specialty providers to enhance the consumer experience so that they can consistently deliver over the life of the loan. We're even seeing lenders establish backup relationships with critical vendors to ensure that they can always deliver on what they promised. Today, consumers have so many choices when picking a mortgage lender, and they have instant access to customer reviews and news articles and lender ratings and other resources that can influence them to pick one lender over another. Performance and experience is what attracts and retains customers. Thanks again for having us.
I think that's some great insight. Now I want to bring a lender into the conversation. So join me in welcoming Jeff Lena. He's the Executive Vice President of National Wholesale Production at Plaza Home Mortgage. Can you add to the conversation, Jeff?
That's a great question. I think in the back of the mind of originators' heads, they're thinking, I had a great 2020. I had a fantastic, equally as good 2021, if not even better. So in the back of their head thinking, how do I maintain my business? How do I maintain my volume moving into 2022? We also have some market forces to think about, right? We have interest rates that are going to continue to increase. Tapering is a real thing. We're seeing home prices continue to escalate and go higher. So qualification is becoming an issue. So to answer your question, I think that the big thing people need to be considering is product opportunities. Am I taking advantage of all the product opportunities that are available in the marketplace? Most likely I am not. So the types of products I'm talking about are renovation lending, reverse lending, non-QM, manufactured housing. There's a tremendous amount of products that are available out there. So you also want to be taking a look at your lender selection. Am I working with a lender that has the knowledge and the expertise to help guide me and help make me look like an expert when I'm speaking to borrowers in these types of loan products, right? Generational lending, there's $7 trillion of senior equity that's available in the housing market. Represents a great opportunity for originators. First-time home buyers, the housing stock is changing for them. They're looking at co-ops, condos, multifamily housing, manufactured housing. So do you serve those markets for these borrowers that can afford to enter the housing markets with these type of housing prices? Renovation lending, most people are not able to afford the house they really want. So with renovation lending, we can help them make it the house they really want. So I think all in all, the pie was really large in 2021. We were able to take a small piece, but it was still really large. The pie is going to continue to shrink, and we're going to have to try different flavors to make sure that we continue to fulfill what we want to go into other markets. Thank you.
I think that was very well said. Now I'd like to introduce you to Dan Bailey. He's SVP of Operations and SVP at WFG Enterprise Solutions and WFG Lender Services. Dan, what are your thoughts about 2022?
It's hard to believe that we're just a few weeks away from the final quarter of 2021. And with 2022 fast approaching, the question is, what's the next big thing in the mortgage industry that everybody needs to pay attention to next year? I think there's two things. First, no mystery here, technology, right? Emerging technologies in our industry are fundamentally changing the ways that we do things. So paying attention to those technologies, understanding how those technologies can benefit not only our internal workflows and our efficiencies, but then also deliver an unsurpassed experience to borrowers, buyers, and sellers and participants in the mortgage transaction is vital for next year. A lot of change that we have to pay attention to. The second thing is home equity. Just this month, I think on September 8th, Black Knight issued a news release indicating that there's $9.1 trillion in untapped equity by mortgage holders today. And so it's vitally important as we go next year that we're paying attention to how can we help borrowers tap into that equity, whether it's a cash out refinance, standalone second, whatever it may be. The resurgence of that market, I think, is right around the corner, something we need to be very careful to pay attention to. Certainly from a WFG standpoint, we're staying in close contact with our lenders, with our borrowers, using our surveys and our different tools to develop products and services that can best help them not only fulfill their refinance and resale transactions, but also the home equity transactions that we anticipate will come back in a big way in 2022. Thanks.
Thank you for sharing, Dan. Now, I want to introduce our last speaker. She is a true industry thought leader. She's someone that I think very highly of and that I have turned to on numerous stories as a reporter throughout my 20-plus year career in mortgage lending. Join me in welcoming Lisa Schreiber, President of LSK Consultants. Lisa, tell us what you think about 2022.
Hi, Tony and the Progress in Lending team, as well as all of my mortgage colleagues. I've been asked to talk a little bit about 2022 and some thoughts around what I see for 2022. There's quite a few things I think that we could look forward to or certainly see in the coming year. Certainly one I believe will be around affordable housing and first-time home buyers. You know, all of us have seen great equity in either homes that we've owned or certainly in the marketplace. I've heard of some really interesting appraisals, you know, just in a very short period of time, jumping up. And so that equity position, I think, was valuable for a certain period of time, but certainly has created issues for the first-time home buyer. So, you know, given our current government, and I think focus will be on affordable housing and first-time home buyers, I think you will see more of that. Additionally, some other items that I'm looking forward to, products. I think that it's maybe counter a little bit to first-time home buyers and that product set. I think there'll be a large mainstream adoption of some other products that have been introduced for the self-employed borrower, the professional investor. As we see in the non-QM or non-agency space, there is a huge appetite for that, not only in the private market, but certainly that segment of borrowers growing, and probably was not well served in the refi booms that we've had most recently. So I do see that as something that will come our way in a bigger way, or a more mainstream way, I think. Another thing that I will see is I really believe that costs are going to continue to rise because, you know, we really have had a refi boom. You know, we've got a lot of hiring. We definitely have not focused as much on technology and improvements as we needed to because we were so busy. So we threw bodies at everything, and typical mortgage cycle that I've seen over the years. We really did. We just threw a lot of bodies at things. And even though there are some great technologies out there right now, you know, people have not been as focused on it as they need to be. And I think in 2022, we will see a great move to, hey, I really need help. I really need to understand what technologies are available to me and how I can reduce my costs overall. Not necessarily, you know, reducing staffing in a huge way, but possibly using that staffing in a much more efficient way and being able to scale from there. And last but not least, one of the things I've really been thinking about a lot is I'm looking for a disruptor. I'm really looking for a technology that can help us disrupt where we've been. You know, for everybody that, you know, is probably listening to this, you know, most of you may even be in the technology side. We've been talking about technology forever. As a matter of fact, sometimes I think technology we built 15 years ago is still not being used. So, you know, we just see all these great technologies. We see all these great technologists coming in. We see people coming in from different segments of different industries, even with technology. But I'm really looking forward to seeing somebody who's going to come up with an idea that is just so easy and so, you know, just so easy and to implement, that is cost effective, maybe agnostic to LOSs, you know, and I'm not talking about a point of sale tool necessarily, or, you know, a e-close tool. I'm talking about something that literally will help us just manufacture a loan in such a way that, you know, we're not worried about, you know, each loan going through and touching 10 different hands. You know, maybe we're just looking for something that is more of a tool or a manufacturing process. So maybe it is multiple hands, but each hand has a very specific goal and has a very specific skill and can really move loans quickly. You know, I was at a conference recently and we were talking about, you know, technology displacing staffing, and everybody always freaks out about that. And then I always think about DU and how everybody thought that was, you know, going to change the world. And it sometimes I feel like it made it harder. So I would say one of the big things for next year is I'm looking for that disruptor. I'm looking for that tool, that idea, that manufacturing process that's really going to change for us, change our world in a very positive way. Anyway, I thank you for your time and I wish you well. And hopefully 2020 will be a fabulous year, not just as far as, business, but for you personally. So thank you very much.
That was another awesome panel, Tony. It's great to hear what industry thought leaders are thinking about when it comes to what we should expect in 2022. Well, now I want to turn to a very special part of the Engage event. For the third year in a row, Progress in Lending is proud to announce the 2021 Lending Luminary Award winners. A luminary is defined as a person who inspires and influences others. And that type of person is exactly who Progress in Lending is looking to honor. These mortgage executives are helping their companies and the industry thrive. Ladies and gentlemen, the 2021 award winners are David Ock, COO of Blue Sage Solutions; Craig Bechtel, COO, Mortgage Flex Systems; Peter Butler, Executive Managing Director at Wipro Opus Risk Solutions; Matthew Covey, CEO and co-founder at Signal Intent; Rocky Forantan, founder and CEO at Lender Homepage; Jack Friend, CFO, COO at Incelerate; Josh Friend, co-founder and CEO, Incelerate; Vince Fury, Chief Revenue Officer at Open Close; Greg Holmes, President and CEO at Credit Plus; Omar Jordan, CEO at Lender Close. Tony, now I want to turn it over to you to announce the rest of our amazing award winners.
Thank you, Michael, and congratulations to our first Lending Luminary Award winners. Now, let me continue the list by naming our next winners. First, Keith Kemp, President and CEO at Blackfin Group; Jane Mason, Founder and CEO at Clarifier; Roy McGregor, EVP of Strategy at Lotusoft; Tim Nguyen, CEO and co-founder at Be Smarty; Sunita Pankaj Nair, Director, Program Management at Tavant Technologies; Jim Paolino, CEO and founder at Lodestar Software Solutions, Inc. Nora Punjwani, President and CEO at Awesome Technologies, Inc. Lisa M. Schreiber, President at LSK Consultants. Kathy Mantich, SVP at First Close. And lastly, Michael Hammond, founder and president at Next Level Advisors. Congratulations to all of our 2021 Lending Luminary Award winners. They are truly reshaping the mortgage industry for the better and making our industry a little bit more innovative each and every day. And with that, Engage 2021 comes to a close. Don't forget, we will be accepting nominations for our Innovations Award and our Thought Leader Award, so be sure to apply. Thank you all for joining us. Thank you to our speakers. Thank you to Michael Hammond for helping me moderate. Thank you to our sponsors, Loretta and Questsoft. And that brings the 11th annual Engage to a close. Until next time, so long, everybody.